What's going on, everybody? Welcome back to yet another video. In today's video, I'm going to be showing you guys exactly how you can grow your small trading account by only trading SPY and QQQ. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Now, before hopping into the video, I did want to bring this up. I feel like a lot of people are going to find value in this. What I was thinking about doing was opening up a small account and doing live trades, only trading SPY and QQQ, and showing you guys exactly how you can grow that small account. So you guys are going to see the execution. You're going to see how I go about milking the profits. You're going to see how I go about my stop losses and so much more. So if you do want that, make sure to like the video, comment down below, and I will be doing that very, very soon. But now, how are you going to grow your small account? This is going to be a perfect combination with when I do open that small account and start trading live, plus the information that I'm going to be giving you in this video. So the very first thing is you need to find a strategy that works for you. Now, when day trading SPY, QQQ, ES, or NQ, we're going to talk about the futures here in a few minutes, but you need to find a strategy that works, whether it be supply and demand, support and resistance, Fibonacci. I have found that those three things are very, very accurate on SPY and QQQ. So what you want to do when trading SPY and QQQ is you want to find areas of interest. As a small trading account, you don't necessarily want to be trading breakouts just because the risk reward really isn't there when doing the breakout. Plus, most of the time, you don't know exactly where your stop loss is. So you do want to start off by looking for areas of interest. If you like to just do support and resistance, start on the daily time frame. What you want to do is you want to look for areas of wicks. So I like to look for at least 3 wicks touching one area to then validate that as a potential resistance or support. And remember, when resistance is broke, it becomes support. When support is broke, it becomes resistance. So a really good example would be over here. As we can see, there was a lot of resistance at this area. 1 hit, 2 hit, 3 hit, 4 hit, 5 hits right here. And we almost hit it right here. Now, when price broke above it, what did it do? It came back, it tested it as support, and then it pushed all the way up to 431. So like I said, what I'm looking for is at least 2 to 3 wicks to draw my support or resistance. The more wicks that hit that area, the stronger it is going to become. So a trade that we ended up taking yesterday was the bounce off of this 410 area. When trading SPY and QQQ, intervals of 5 are very strong areas of psychological support and resistance. So again, if you're just trading SPY and QQQ, intervals of 5, 410, 415, 420, 425, 430, etc. So if we just draw this at 410 and put it on the chart right here and look at the 1 hour time frame, look at all this support that occurred at 410. If we throw this on at 415, we are going to see all the resistance that has occurred at 415 plus support. We had some support and resistance over here, support over here, resistance right here, and we're rejecting it today as well. Finally, we were able to break above it and push all the way up into 416. But again, there was resistance. What about this 420 area? If we just put 420 on the chart, again, there was price action around the area for support and resistance. So you always want to mark those psychological areas of 5. Plus, you want to look for other areas of support and resistance. Maybe you really like supply and demand. If you don't know how to use supply and demand, I do have an entire video showing you on how to draw that. But as we see right here, there is daily supply on SPY right here that price has not been able to clear. If you like Fibonacci, I did an entire 1 hour video showing you on how to plot it on your charts, how to trade with it, how to identify stop losses, and so much more. So if you do want to check that one out, the link will be down in the description. But a trade that we ended up taking today on SPY was from using Fibonacci retracements. All I did was take this pivot low, so yesterday's low, up to this high point right here. And as price came down to that 412.6 area, we were able to take a bounce and catch a beautiful move to the upside. So again, as a small account, you don't want to be buying the breakouts because your risk reward is not well defined. However, if you identify areas of interest, support and resistance, supply and demand, Fibonacci, you can always skew the risk to reward in your favor. If you're a small account only trading with $2,000 and you got long right at 412.6, where's your point of invalidation? If price starts showing weakness below like 412.4 to 412.3, so your stop loss is very well defined. But then from there, price ran from 412.6 all the way up to 413.78, where you could have found another possible position by taking this pivot high down to pivot low on the Fibonacci's. And as we can see, price came up, it rejected it hard. You could have gotten short with your stop loss right above here. And what did price do? Right back into the low of day. So pretty much what I am getting at here, as a small trading account, you want to trade around these areas of interest because your risk is always going to be very well defined and it skews the risk to reward significantly in your favor. Now, soon we're going to hop into why you want to watch both SPY and QQQ. But the next thing that you do want to keep in mind when trading with a small trading account, however much is in your account, you never want to use more than 10 to 20%. Now, I know if you're starting really small, like with $500, that's going to be really hard to do. But if you're getting up into that $2,000, $3,000 mark, you don't want to be using more than generally 10 to 20% of the account. Reason being, if you were to put all $2,000, $3,000 of your account into a trade and it went against you and your stop gets hit, you're going to lose a good portion of your account just based on one trade. But if you're sticking with that 10 to 20%, ideally smaller than that. But again, if you're finding those key areas and getting those sniper entries, you can always skew that risk to reward in your favor if your stop loss were to be hit. But again, you don't want to be using more than that amount, because if your stop loss is getting hit over and over again and you're using 30-40% of your account, you're going to blow your account fairly quickly. Now, if you stick to 10% of your account and you are identifying these sniper entries, it's going to take a lot more trades to end up blowing your account. Now, when you mix that with squeezing your profits as much as possible, that is how you are going to grow that small trading account. So let's touch on that, and then let's discuss SPY and QQQ. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. So if you are looking to learn more about my overall day trading and swing trading strategy, how to find bounces, rejects, support and resistance, all the indicators I use, Fibonacci, swing trading and day trading setups I like to look for, and so much more, make sure to check out my book, The New Age of Technical Analysis, on Amazon. The link will be down in the description. So I know as a small trading account, it's very tempting to just want to take your profits as soon as you start seeing green, but that is not what you want to do. Yes, you want to focus on the consistency, and yes, you don't want to be greedy at the same time, but you also don't want to be getting long right here and then taking your profits right here. You're not going to grow a small account doing that. You need to let those winners run. So let's just say that you ended up buying 2 contracts at $100 a piece. You have a $1,000 account. That's going to be 20% of your account in that trade. And your max risk is going to be $20 per contract. So if your stop loss was hit, you're going to be risking around $40, which is going to be 4% of that account. So again, say you got a really good entry, and as price goes up towards your 1-to-1 risk to reward, that's when you can decide, okay, am I going to take my profits? Because at that point, you're up $40. Again, 2 contracts, $20 each. You can take your profits on one of your contracts, or you can move your stop loss up to break even on both contracts. That is completely up to you. If you think that the stock has more room to run, then feel free to move your stop loss up to break even. But if you're a small account, you do want to focus on the consistency portion, not hitting home runs. I know a lot of small account traders who are trying to hit those home runs and thinking that price is going to come all the way back up into high day. Could that happen? Of course, but you do want to focus on that consistency and slowly growing that account over time. So let's just say that you did take profits on one of your contracts at $20, you're up 2% on your account. Now at that point, you have one more contract. You can set your stop loss at break even, slightly below break even, and then let's say that price goes up to $40 per contract on your final contract. You then can cash out with your $40 gain. That's a $60 gain on your $1,000 account, which is a 6% growth in a single day. Again, don't be greedy and try to aim for that 50% growth in a day. A 6% gain on your portfolio, your small account, in a single day is an amazing trade and an amazing day. But also at that point, you still have more buying power left. So you only use $200 of your $1,000. You still have $800 that you could possibly use. So what are you going to wait for? You're going to wait for another possible setup. So at this point, you're up $60 on the day. If you're going to take another trade as a small account, what you want to do is you want to risk a little bit of your profits on the next trade. So say SPY came up and it ended up rejecting off this point right here. You got short, let's just say at the close of this candle right here, your stop loss is going to be roughly up here. So you're up $60 for the day. You're probably risking $25, $30 per contract. So you're still guaranteed a $30 gain on the day if your stop loss were to be hit. So in this scenario, you would take one contract. And as you see, price flushed almost immediately to the downside, right back down in the low of day. So that is 2 winning trades that you could have called. And maybe your account could have went up 8% on the day, 9% on the day. If you took your profits at your 1-to-1 risk to reward, it would have been 9%, because if you were risking 30, you want to be at least willing to make 30. So that would be a 9% gain on your $1,000 account in a single day. Focus on that consistency. That is very, very important. Base hits are going to be a lot more important than home runs, especially as a small account. And as you continue to trade on that small account and you find that consistency and the account grows over time, that's when you can go from 2 to 3 contracts, 3 to 4, 4 to 5, 5 to 10. So that's ultimately how you're going to be growing that small trading account. Find those sniper entries, wait for the A+ setups. Don't sit here and trade all day. That's another thing that you don't want to do. Make your money and dip out for the day. Focus on the long run, not the short term. So now, why you want to watch SPY and QQQ? Typically, both of these names do move with each other, and if QQQ were to come down to a strong bounce or up to a strong reject and QQQ were to reject or bounce, more than likely SPY is going to follow. Some days they diverge, but overall they pretty much follow the same exact price action. Lately it's been a little weird, but ultimately they follow each other. So that's why we want to do our analysis on both. Their top holdings are pretty much the exact same. So if QQQ were to come up and reject off of a strong area of resistance, let's just say 341 was a strong area, or on SPY, I had a reject up at, I think it was 416.3, fell just short of that area. Say SPY came up and rejected 416.3. What do we think more than likely QQQ is going to do? Also reject as well. So we can look for trade opportunities on both of these names. So when I'm trading SPY and QQQ, I do my analysis on both, again, support and resistance, as well as Fibonacci, but I save the supply and demand for the ES and the NQ. Now I talk about this a lot, why it's important to do your analysis both on the futures as well as SPY and QQQ. Now the reason being, just because the futures trade 23 hours a day, they open Sunday at 6 p.m. Eastern time, close Monday at 5 p.m. Eastern time, and then open up that same exact day on Monday at 6 p.m. Eastern time. It does that through the entire week, closes Friday at 5 p.m. Eastern time, and then opens again Sunday at 6 p.m. Eastern time. So because the futures trade 23 hours a day, sometimes there's going to be a little different price action when it comes to doing your analysis on the futures. So a really good example was yesterday, I told everybody to watch NQ for this bounce right here at 13,565, or actually 13,566. We're going to round that up. Now, if we break it down to a 5-minute time frame, what did NQ do? It bounced right off of the level, and that was the exact bottom before we went and set a new high today. Now, if we head on over to QQQ and we take that same exact 1 hour fib, so zooming out to the 1 hour on NQ, you can see this was the pivot low to pivot high that I took. So that was Wednesday in the overnight session. Yes, it was. If we head back on over to QQQ and we look at Wednesday in the overnight session, it was right here, pivot low, pivot high. So that is why doing your analysis on the futures as well as SPY and QQQ is very important, because sometimes price can bounce or reject off of a future level, but it doesn't bounce or reject off of QQQ or SPY, or sometimes vice versa. That's why I like to watch both. And if the futures end up validating the level, I'll watch the futures for the trade, but trade SPY and QQQ options. If SPY and QQQ confirm the trade, then obviously I'm inspired QQQ options, so I'll be watching SPY or QQQ. But pretty much to summarize this entire video, when day trading with a small trading account, if you only want to focus on SPY and QQQ, make sure you're doing your analysis on both SPY and QQQ as well as their futures, ES and NQ. Depending on how much is in your trading account, you generally don't want to be using more than 10 to 20%. And again, if you can identify sniper entries, that is mainly what you want to look to trade, because your risk reward is always going to be skewed significantly in your favor. Avoid the breakouts, and before trimming your position or before taking any profits, you want to at least be looking for a 1-to-1 risk to reward. Now, if you're trading with 2, 3, 4+ contracts, that's when you can start milking your profits and capturing larger moves, taking profits as it continues to move in your favor. But that is going to wrap up this video. So again, if you guys do want to see the live trading on a small trading account and how to properly grow that small account, make sure to smash that like button. Comment down below letting me know that you want it. Also, make sure you guys are subscribed to the channel. Other than that, everybody have an amazing rest of your day, and I'll see you guys in the next video.